Hi guys, I'm Karunya Rao, and in Ideas for Profit, we tell you why Cipla merits your attention as an attractive pharma bet. While Cipla is ready with a COVID portfolio for another round of exigency, focus is clearly shifting to long-term drivers in the form of thrust on green chemistry and digitisation, which may not only help inject efficiencies, but also help uplift their ESG standing. Over the near to medium term, all eyes will be on utilization of strong cash balance, which may be deployed in inorganic investment opportunities in oncology and consumer health. June quarter sales were up 27% year-on-year thanks to a good show by domestic market and API segments. In the domestic business, company grew 16% in chronic category. In fact, Cipla's market share in chronic has inched up to 8.2%. Overall, if you look at the domestic business comprising branded, trade generics and consumer health, it has seen a growth of 68% aided by demand during the second wave of COVID-19. The US revenues meanwhile rose 5% year-on-year to around $141 million, backed by traction in the generic version of albuterol sulfate MDI, which was partially offset by pricing erosion in the remaining portfolio. In South Africa, the company continues to gain market share in oncology and ARV categories. API segment has benefited from one-time profit share on the commercial supply of an API. The emerging markets meanwhile was impacted by timing deferral pertaining to Middle Eastern supplies. Here, the management expects some amount of recovery coming in the current quarter. As far as margins are concerned, they showed a good improvement despite higher operating expenses. Cipla now has 89% share in the Proventil generic market. Considering all brands of albuterol, the company has a 14.1% market share compared to 13.2% share in Q4 FY21. The company's other US-bound respiratory drug is also on track. In May 2020, another inhalation drug from the company, generic Advair, was filed with the US FDA. While Cipla doesn't need to submit any more clinical data, the regulator has asked for more non-clinical data. The review process may take about 18 to 24 months in total, which means it should add to revenues in FY23. Other products to watch out for are the two partnered peptide injectable filings made in FY21, which also include one new drug application. These applications are expected to be approved by FY23 as well. Key risks for the company lie in adverse regulatory action and earlier than expected approvals for competitors in the generic space, which may impact pricing. The company is working with the US FDA to resolve the issues highlighted for its Goa plant as well, for which it had received a warning letter back in Feb 2020. Please note that the Goa facility contributes only about 2.5% of the overall sales. Over the course, India business has expanded COVID portfolio, of which in-licensed products such as Tocilizumab, antibody drug cocktails, etc. are gaining a lot of interest. Though at present it is difficult to predict their contribution to revenue, but as the management pointed out, given the status of vaccination in India, there is long tail for the COVID opportunity. Nevertheless, leadership in chronic, inhalation therapies and traction in consumer health are likely to help over the medium term. In the US, the albuterol opportunity is expected to stabilize as moderate market share gains will be offset by pricing erosion in due course. However, other inhalation category filings, particularly Advair along with potential launches such as nano-paclitaxel and lanthanum carbonate, are expected to contribute from FY23 onwards. Moreover, Revlimid adds to the FY23 opportunity after the settlement of the patent dispute with Celgene. The notable part of the US business is that on a full year basis, the margin profile is now close to that at the company level. On the capex front, annual rate is expected to be around 700 to 900 crores, wherein one of the focus areas will be digitisation. Cipla is deploying several new digital technologies to accelerate the pace of formulation development. Coming to EBITDA margins, it's likely to settle in the range of 22 to 23% in medium term versus around 19% odd in the pre-pandemic era. This is on account of enhanced use of digital tools leading to savings, partially offset by return of some of the pre-COVID expenses. Among triggers to watch in the near term is the utilization of 5,000 crores cash on balance sheet. The company is exploring value-enhancing opportunities to spend this cash, which may include investments, acquisition in the area of oncology and consumer health. Also, watch out for adoption of green chemistry. In fact, Cipla has significantly reduced the usage of solvents in the early phases of API development. And as mentioned in its annual report, it has reduced usage of isopropyl alcohol and methylene dichloride from the manufacturing process. Cipla is looking to achieve carbon and water neutrality, zero waste to landfill by 2025 and champion antimicrobial resistance stewardship. The stock has rallied about 65% from the time we published our recommendation note in May 2020 and now trades at a multiple of 12.6 times FY23 estimated EV/EBITDA, which is in line with the sector. We believe the current consolidation phase for pharma sector, investors should focus on winners for the long haul. Cipla, with its leadership in inhalation, focus on green chemistry and potential deployment of cash savings for new growth drivers, warrants attention.